Okay, we're going to go ahead and get started. I appreciate everybody coming out today. Hopefully you learned something that will help you along your journey in the markets. I will warn you in advance, this is probably not going to be the most exciting class that we've ever had, but honestly I think it's going to be one of the most useful. One thing that traders tend to make a mistake on is they pick the fanciest trading platform they can find and they fail to look at what's behind the platform, the brokerage firm, the clearing arrangement, the margin rules, that sort of thing. Sometimes having the best platform isn't the best solution. Sometimes there's actually a little bit of compromise involved depending on your strategy and what exactly you're doing. So we're going to talk about all of those types of things as well as what you should be looking for in a platform and how much you might or might not be willing to pay if you decide to get an upgraded platform. So anyway, these are all going to be very helpful tips, but not as exciting as talking about selling options or trading spreads. So let's go ahead and get started. If you are unfamiliar with who we are and what we do, we are DeCarley Trading. We're out of Las Vegas, Nevada. We're a futures and options on futures brokerage. We only deal in futures and options. We don't deal in stocks or ETFs or anything like that. We're specialized, and so we'd like to think that we're good at what we do. We're a little more efficient at offering these products because that's all we do, 24 hours a day. If you have any questions about anything we talk about today or any interest in learning more, you can contact me. Here's my information, or you can visit our website, DeCarleyTrading.com. We have several, I want to say somewhere around 30 free trading videos on the website if you're interested in learning more about the markets. We also have free articles, commentary, charts, those sorts of things. And if you're on social media, you can check me out at Twitter. The handle is @CarlyGarner. And I'm also on Facebook and Instagram. I am by the way, I failed to even mention that my name is Carly Garner. I'm a broker, a strategist, and an author. I write a monthly column for Stocks and Commodities magazine. I also contribute content to Jim Cramer's Mad Money from time to time. And I also write a couple of in-house newsletters that are free to our brokerage clients, the Financial Futures Report and the DeCarley Perspective. We offer market insight, commentary, trading recommendations, and anything you can imagine we talk about. I've written 4 books. The newest book is Higher Probability Commodity Trading. It was written in a way that I intended to be useful for traders of all sizes and all experience levels. So even if you're a beginning trader and you're not familiar with the markets, hopefully you can pick this book up and read it from front to back and understand what's going on. The first couple of chapters is just getting everybody up to speed, and then it gets into some of the more complex trading strategies from there. You can buy it at any major outlet, but it's cheapest on Amazon, of course. And if you want more information on the book, Higher Probability Commodity Trading book is where you'd go. So before we get started, I just want to make sure that everybody understands that there's a substantial risk of loss in trading futures and options. Now, today's topic isn't that risky. When you talk about choosing a platform, there's not a lot of risk involved in that, but what you do with the platform, that's where the risk comes. So if you walk away from this class with one main idea, actually I have a couple of important ideas, but the primary thing I want you to understand is fancy platforms don't make money. In fact, fancy platforms cost money. Now, I'm not saying you should never spend money on a platform. That's absolutely not what I'm saying. In fact, there's a lot of great platforms out there that are worth every penny. But I don't want you to fall under the ether that somehow having all the flashing lights and all the crazy exotic tools is going to help you make money, because that's not necessarily the case. Some of the most impressive displays of trading I've ever witnessed took place on the Rolf and Nolan platform. Those of you that are old school and have been around for a while, you know exactly what I'm talking about. It's literally, it was a rectangle that you pulled up on your screen. it had a logo in it, and then it had a blank line, and you typed your orders into the line. Just like you see here in the middle of the screen, it would be something like buy, or B space, 1 space, ESU 7 space. That is how we entered orders, just like that. And people made and lost a lot of money on those platforms, just like they do on the fancy ones today. But I have to say, I think I've almost seen better trading done on a platform like that than I've seen on an expensive, high-end, feature-rich platform. So it's not the platform that makes money, it is the trader. With all that said, there's probably a happy medium when it comes to trading platforms. If you have too much information, too much analysis, too many features, you're probably going to be overloaded. It's going to bog you down. You might not make the best decisions. Happy medium is probably where you're wanting to be. So obviously, market access is important. And when most people think about market access, they think about quotes and charts, the ability to place trades. And yes, that is ideally what we're going to talk about. But we're going to also talk about another side of market access that people just simply don't talk about. They don't think about it. So commodity markets obviously are volatile, they're leveraged, and they're unforgiving. It is imperative that traders have timely and accurate information regarding their accounts in addition to around-the-clock data. Now, if we would have had this webinar 10 years ago, it would have been completely different. But in today's world, the markets are open 24 hours a day. They don't stop, so you really can't either. I'm not saying you shouldn't go to sleep at night. I mean, obviously, we all have to sleep, but you really, really, really want to have access to your account and the markets on your cell phone, and etc. You want to be able to see what's going on. And you want to be able to react to that information at all times. Now, I'm not saying you should stare at it all day long, tick by tick. That is not what I'm saying at all. But even if you're selling deep out of the money options that have very little risk of ever getting in the money, you should, every few hours, or at least handful of times a day, you should be checking in on the markets, because you never know what's going on. And I'm the type of person that I need to see it, otherwise my mind plays tricks on me. If I can't see what's going on in the markets, I'm imagining the worst. I get anxiety. I'm thinking the S&P is probably down 100. You know, it's those kinds of things. So make sure you have access on your cell phone. It does wonders for the psychology of trading. Ideally, traders should strive for triple access to their account, or at least double. And what I mean by this is platforms are going to be one of 3 things, or there may be 3 versions of these 3 things. A downloaded desktop version, which means you have you have a link, you click on it, you download a software application, it is right there on your personal computer, but if you go to the next computer, it's not there. And a lot of times those types of platforms, the settings don't carry over. They're not served on, they're not saved on a server, so they don't carry over to the next computer. So a lot of the times those desktop platforms, if you set it up on one computer and you load it onto your laptop or an alternative computer, you have to set everything up again. It's not like they communicate with each other. So they're not necessarily convenient. You also ideally would like to have access to a web-based platform in addition to your downloaded platform. Because the thing about a downloaded platform is they're usually higher end. They usually have more features, more order types, better charting, that sort of thing. So you want a desktop application, but you also, for convenience, would like to have a web-based platform so that if you're at work or at your mother's house or your brother's house, wherever you are, you can pull up any computer, doesn't matter, log into the web-based platform, see your position, see the markets. It's very convenient, but a web-based platform usually doesn't have all of the upscale features that a downloaded platform has. You'd also like to ideally have access to a mobile phone application, as I just mentioned. I shouldn't even say ideally. I really think this is absolute necessity. You really want to be able to see what the markets are doing. And honestly, if you, for whatever reason, your broker or your setup doesn't come with a mobile application, it's not the end of the world, but make sure you have a free app on your phone that you can pull up quotes on, and they're usually delayed 10 minutes, but that's not the end of the world. In a perfect world, if you had access to your trading account and live quotes on your phone, that would be great. So we just talked about how most people assume that market access is quotes and charts and trading, and that's true, but it goes so far beyond that. You don't just want market access, you want ample market access, and this really, as I mentioned, goes beyond technology. It refers to the brokerage and the clearing arrangement backing that technology. So what I mean by this is you could have the greatest platform in the world, user-friendly, point-and-click trading, anything you could possibly imagine as far as analytics, but if when you put an order through, the clearing firm that's executing that order on the exchange for you has different rules or doesn't cater to your type of trading, the platform is going to do nothing for you. So for example, the biggest obstacle that I see is for option sellers. Not all FCMs and not all clearing arrangements allow option selling. So having access to a fancy option calculator, flashy equations, option spreaders, it really doesn't mean anything if the underlying clearing arrangement isn't friendly to option sellers. So if your platform is pushing orders through a broker that charges you higher span margin, restricts your tradable markets, and yes, this happens a lot. I know for a fact a couple of actually very popular option platforms out there, they only allow their clients to trade crude oil options, euro options, E-mini S&P options, and I want to say corn, maybe a couple others, but it's less than 10 markets. Any other markets are off limits, and they actually tell their clients which option strike expirations they can trade. And it's usually the first month and the second month. Anything beyond the first 2 months is off limits. So the platform's great, but does it really matter if you can't put the orders that you want to put through the platform? Probably not. And other brokerage firms outright forbid option selling. So for option sellers, if you pick your platform first, and then you think about the brokerage arrangement second, you might get yourself into a predicament in which you have to just move your account over and learn a new platform, and it can be very frustrating. But it's not just option sellers that have to worry about the clearing arrangement and the brokerage arrangement that backs their platform. Day traders have the same issue well, not the same issue, but a similar issue. Having a platform that has tick charts, complex bracket orders, dome panels, chart trading is a lot less appealing if it isn't accompanied with a brokerage relationship that has 24-hour day trading margins. I know a lot of firms out there, they have great platforms and super low margins during the trading day, but in the overnight session, they charge full margin, or some of them even charge double or triple margin, meaning they really don't want you to trade overnight. They only want you to trade in the official day session. So in the E-mini S&P, that would be like 8:30 a.m. Central through 3:15 Central. And that's right, I said 3:15 because a lot of those brokers that do that sort of thing, they don't let you trade till the 4 o'clock close. In fact, I've talked to some people that trade on those kinds of platforms, and they thought the market closed at 3 o'clock Central Time. They had no idea that it actually traded to 1:15, paused, and then reopened and traded till, sorry, I said 1:15 because I'm in Pacific. Anyway, you get the idea. They had absolutely no idea that the market traded beyond 3 p.m. Central. And that's because their broker basically shut the platform off at that time, and believe it or not, they liquidate everybody's trades at that time. So having a nice platform is fine and dandy, but if you don't have the freedom to exit your own trades at the end of the day, then what good is it? I know I just mentioned this kind of, but to reiterate, a lot of fancy platform brokers, they will liquidate everybody's trades at 3 p.m. Central, regardless of price or anything else. And I can tell you, as somebody that looks at charts all day, the chart doesn't care what time it is. The chart pattern is going to play out. Sometimes it requires holding positions through the close. Sometimes it requires holding positions overnight. The chart doesn't care, but neither does the broker that does that to you. And another aspect is you want to make sure that there's sufficient technical and customer support. Having a great platform, again, is useless if you can't get someone on the phone to help you in a situation. It might be something as simple as user error. Maybe you don't know how to use the platform and you just need help using it. Or it might be something a little more critical. Maybe the platform has crashed. It's having a communication issue with the exchange, whatever the case is. If you can't get someone on the phone to help you, it can be very, very expensive. I do happen to know there are, and you'd be surprised, there's a lot of futures brokers out there, mostly, I'm kind of referring mostly to the discount futures brokers, but they have hundreds and hundreds of clients, maybe or probably even thousands of clients, and they may only have 1 or 2 people working a customer service desk. So if you can imagine, if the platform goes down, they're getting hundreds of calls at the same time, and they really have 1 or 2 people to try to field them. Just so imagine trying to get help with something like that. So again, having a great platform isn't the end-all be-all to your trading success. And you might be thinking to yourself, well, I'm a position trader, so none of those things apply to me, but that's not necessarily true either. If you pick a particular platform and brokerage arrangement just because you love the platform, it might not do you a whole lot of good if to have those excessive charting capabilities, if you don't have access to a 24-hour trade desk. And I know most people place their orders online through a platform on their own 95% of the time, and that's great. But there is going to be a time where maybe you lost your internet connection, you have a power outage, whatever the case is, you need to be able to call a trade desk to flatten your account, to cancel orders, that sort of thing. And if there's nobody there to answer the phone, you're in big trouble. We've seen how much the markets can move in a single day. Just today, the S&P, it moved 20, 30 points in the blink of an eye. So that's $1,000 to $1,500 on one contract. Imagine sitting on hold or being in the dark, not having access to power or internet with that going on in your account. Also, I truly believe that it is imperative to have option trading capabilities. There are still a lot of platforms out there that are futures only. They don't have options, and hopefully that changes. I think all platforms should have options. Another thing position traders would need to worry about with their market access, in addition to choosing the right platform, is span minimum margin and margin leniency. If you picked a great platform but your broker isn't so great and he won't work with you with margin calls, it can make a big, big difference in your bottom line. And when I say work with you, some people don't understand how span works. They don't understand it can be manipulated. Span margin can be adjusted. You don't always have to liquidate trades or wire funds to the account. A lot of times, not always, but most of the time, you can adjust the position. That might be selling options against your future. It might be buying cheap options to protect short options. It could be a lot of things. But there's usually a way to manage margin other than liquidating or wiring funds. Your platform is not going to tell you all those things, and your platform is not going to help you do that, but a good broker backing that platform will. So in conclusion, and don't worry, we are going to talk about platforms. I just want to point these things out to people because they're not obvious, but they're very important. In conclusion, most traders, for most traders, it really makes sense to choose a brokerage service. And when I say that, I mean a broker and a clearing arrangement first, then choose a trading platform second. You're probably going to need to compromise somewhere. And that's because, unfortunately, there is rarely a perfect brokerage, clearing, and platform for a particular trader. Each brokerage and each platform caters to a certain type of trader, and a lot of times they don't align. And it's ironic, but there just really is, with all the choices out there, there's probably 50 or more futures trading platforms, and there's probably, the last I checked the FCM list, there's somewhere around 60 FCMs clearing futures trades. And believe it or not, I have yet to find the perfect scenario. So you probably will have to compromise depending on what your strategy is, unless you're just a straight E-mini S&P futures trader trading one lots. In that case, then you could probably find exactly what you need. If you're doing any type of option trading or option selling, you're probably not going to find exactly what you want, but you can come close. So things that you should be willing to compromise on within reason, and I'm not saying, that just take whatever you can get. That's not what I'm saying. Do your homework and you will find something that's a really good solution for you. It just might not be perfect. So things that you should be willing to compromise on within reason are cost and upgraded features. So if a free platform isn't enough for you, you should be willing to pay something for a platform. There are a lot of cheap platforms out there. There used to not be. 10 years ago, we would have been talking hundreds and hundreds of dollars a month. Now you can, for 40 or 50 bucks, you can get a really good upgraded platform. You may have to compromise on upgraded features. You might not get exactly everything you want, but you can probably get close. Things you should not compromise on are things that are going to affect your trading results the most, such as the freedom to execute your trading strategy within reason, and I add that disclaimer because some people assume that their strategy is always reasonable, and it isn't. For instance, I'm going to talk about option selling again. There are people out there that would love to sell 100 crude oil calls deep out of the money for $10 a piece. When I say $10, I'm saying actually $10, a diamond premium and $10. And they want to sell hundreds or thousands of them in a very small account, thinking that the odds of crude oil ever getting to $80 in the next 2 months are slim to none, and that's probably true. But the way that option pricing works is you're going to blow, your odds of blowing out your account are probably 95% or higher, because all it takes is a big up or down day in crude oil and your entire account's gone. So when I say within reason, I'm saying, you know, look, your broker wants to make money. He makes money on commission. He only makes if you trade, but they only want you to trade if it doesn't risk putting them out of business. It is risky to be a broker. Most people don't realize that either. They wonder why there are restrictions in platforms. They wonder why brokers don't like certain types of trading strategies. In some cases, to be honest, I think a lot of brokers don't like option selling because it's more work, not necessarily because it's more risky. I believe it's less risky than most trading strategies, but that's my opinion. But the reality is, if a client loses more than they have on deposit, they're no longer trading with their own money, they're trading with the broker's money. And I've been there and I've done that, and it's no fun. But that's exactly why brokers put restrictions on clients and why platforms don't always live up to what they should, because there are restrictions on the back end depending on the broker that you're using that platform with. You should not compromise on margin. If a broker is charging you more than the exchange minimum margin, you probably should look for another broker. And you should not compromise on around-the-clock and capable support. I know of brokerages and FCMs out there that do not have 24-hour trade desk, and to me that's insanity. In this world, in the environment we're in, everybody needs to have somebody available 24 hours a day. Without it, it seems like a nightmare to me. So now that we've talked about all of that, choose your broker and your clearing relationship first, then go to your platform choice. Let's talk about a couple things that nobody wants to talk about, and that's exchange fees. I see that there's quite a few questions piling up in the chat box. I apologize. I normally try to answer them as I go, but I think I'm going to wait till the end and try to get all of those for you, because there's quite a few. I don't want to slow things up. We're on a roll. All right, so when it comes to the CME data fees, there's a few things that you should keep in mind and a few ways to help prevent you from paying money that you shouldn't pay. So there's a few things to know. For starters, for those of you that traded years ago and are just now coming back to the markets, you might be surprised that we're talking about fees. But yes, as of January 1st, 2015, the CME, the Chicago Mercantile Exchange, started charging traders for live price data. However, those that are categorized by the exchange, by the CME itself, as non-professional traders, and that's important, and are accessing the price data within an active and live trading account, the fees are minimal. If you are a non-professional and you're getting the live quotes within a live trading account platform in which you can actually execute trades, it's kind of an annoyance, but it's not a deal breaker. But if you're a professional, if you're categorized, I'm not even saying if you're a professional, I'm saying if you're categorized as a professional by the exchange and they have a list of stipulations, it's going to be very expensive for you. You do not want to allow yourself to be erroneously labeled as a professional trader, and we're going to discuss that in the next slide. Also, I mentioned that the platform has to be a live platform. It has to be one that you can place trades on. Because of this stipulation, you really want to stay away from charting software and analysis software that isn't capable of placing trades. There are far fewer of these than there used to be, but there are still a few old school quote vendors Basically, that's all they are. They're offering quotes and charts without any trading capabilities. But this is an unnecessarily expensive way to obtain market data because you will be paying CME exchange fees out the nose. And I'll show you a chart in a minute to see what we're talking about. Here for primer, we're talking $340 a month just in CME data fees, just so you can run that analytical and software, charting software that doesn't have trading capabilities. If you choose the right high-end quote system and chart system, you can get the same capabilities along with order entry and save yourself $340 a month. So there's a couple, I mean, really these are very simple rules to follow to save yourself hundreds of dollars a month. And by the way, I absolutely am aware that there's way too much text on these slides, but the reality is the text is for me, not you. So don't feel like you have to read everything. I'm a much better writer than I am a speaker. So if I don't have it all written down, then I get sidetracked and I forget things. So don't worry about reading the slides. Just hopefully listen, and hopefully I can entertain you and keep you interested. So if you're a non-professional with a live trading platform, the fees are very little. Basically, for as little as $3 a month, you can get access to market data for all the NYMEX, COMEX, CME, and CBOT markets. For option traders, that's all you need. You really do not need the multi-tier data, which if you're not familiar with multi-tier data, it is the data that you see in a dome panel. It'll give you the best 10 bids and the best 10 asks in the markets book. People call it a book or a price ladder, depth of market, whatever you call. If you don't need those price ladders, don't waste your money. Go for the $3 bundle. And I also recommend just, even if you're only trading one market, let's say you're only trading the E-mini S&P, I still recommend going for the $3 bundle. Because if you subscribe to each exchange separately, you're only saving yourself a couple of dollars. Like in the case of if you're trading the E-mini S&P, okay, you're saving yourself $2. But wouldn't it be nice to see what crude oil's doing? Because sometimes crude and stocks move together, or who knows, maybe your broker will give you a recommendation on corn and you want to check it out. So go ahead and spring for the $3 bundle. I don't think the $2 a month is going to hurt you either way. Being tagged as a professional trader by the CME is very costly, and it's something you want to try to avoid. I'm not saying mislead or lie. I'm saying just don't be erroneously tagged as a professional when you're not. Ironically, most traders fail to underestimate the baggage that comes with being tagged a professional. In fact, some are so eager to be a part of the community that they list their employer or their occupation as professional trader on their trading account application despite having another job. Never, ever, ever do this. Unless you're trading for a living, unless it's your sole source of income, do not refer to yourself as a professional trader. It could cost you over $300 a month just by making that simple little mistake. Also, don't offer to trade for friends and family unless you are prepared to pay data fees as a professional trader. A lot of people believe that because they fall into the NFA's registration exemption that they're not quote-unquote a professional trader and it's not going to affect them in any other way, but that's not true. Once you take power of attorney, in other words, once you have the documentation in place to trade for somebody else, even if it's your mom or, well, I take it back. You normally can trade for family, but friends. Let's say that you want to trade for somebody, your neighbor, and you take POA. There's nothing wrong with doing that as long as there's no monetary relationship. However, it will tag you as a professional trader and cost you $340 a month. You don't want to do that. Another thing is, with the technology and the availability of websites and creating websites, a lot of people, they think it's cool. They build some sort of trading website. It talks about their trading strategy. Maybe they even try to sell something. Don't do that unless you really, truly are making a living of it, because once you do that, you are holding yourself out as a professional, and you're going to be charged as a professional. To give you an idea of what professional traders must pay in CME fees, there is no bundling. There is no choice between multi-tier and top line. They pay $85 per exchange per month, per device. So if you have 2 platforms, you pay $680. If you have 3 platforms or 4 platforms, you're paying 3 or 4 sets of data fees. You can imagine that it gets very, very expensive. It is not out of the question to see professional traders spend thousands of dollars on data fees. Now, we talked about the CME data fees. Let's talk about ICE. The ICE exchange is the only exchange in the, well, I shouldn't say the only, yeah, actually it is it's the only non-CME exchange in the US right now. They took the cue, or they took they followed CME's lead, I should say, by charging data fees. As of April 1st, they decided they were going to charge $110 per month per device, plus a New York City sales tax. Anyone that's ever been to New York City knows their sales tax is on the high side. It ends up being about $120 a month just to have price data on the ICE exchange. There is no break for non-professional traders. Everyone's treated the same. And again, it's per device. There's no netting. So if you have 2 platforms, you pay 2 fees. If you're not familiar with what's traded on the ICE exchange, it's the softs plus the dollar index, cocoa, coffee, sugar, orange juice, dollar index. They do offer quite a few other products, but most of you have never heard of them, so I won't even mention them. And even these products that you probably have heard of are very thinly traded. In my opinion, the data fees are way too expensive for most traders to justify. I recommend that if you want to trade those markets, that's fine, but do so without paying the exchange fees for live data. You can still trade in our platforms. You can still trade the products. You just wouldn't be able to pull up a chart or look at the quote board and see live data. But we could show you how to see flash quotes, and we can give you quotes. So it's not convenient, but it's not $110 a month either. I just happened to glance and notice someone's mentioning that on July 10th, ICE is coming back to the CME. That's the Russell. So that one particular product, the Russell Index, is going back to the CME, thank goodness. So anyone trading the Russell and being forced to pay those crazy fees will get a little relief. But everything else is still staying at ICE. So let's talk about platforms, finally, after all of that. Should you pay for a platform? That's the question. In their quest for boosting trading volume, most brokerage firms offer a complimentary order entry system along with a suite of available upgrades. Free platforms are continuously improving, but some are still extremely challenged. I know of FCMs out there that offer free platforms, but they have no charts, they're clunky, they're not user-friendly, so they're free, but you get what you pay for. They're really not worth using. On the other hand, we offer at least one free platform to our clients it's pretty great. It has most of the features that some of the upgrades have. It's not perfect, but it's great, and it's better than most free platforms. So there are some free platforms out there that are very capable and are perfectly fine for meeting the needs of most traders. But you have to shop around. Not all of them are. There are several, obviously, I just mentioned earlier that there's 50 or so fee-based platforms. Most fee-based platforms, but not all, offer better charting. They might have long-term charts with long-term data as opposed to just the last couple of months. They have other upgraded features, maybe option spreads, option Greeks, futures spread builders, things like that. I can say that the cost of platforms has come down magnificently just in the last couple of years. I mentioned before, for about $50 a month, you can really get a great platform, and it used to not be that way. It used to be you're looking at least a couple $100s a month to get a decent one. So again, should you pay for a platform? Well, the average casual trader is generally happy using a capable free platform. When I say capable, I'm not talking about the ones that don't have charts and take 10 minutes to enter an order. Those are junk. But a good free platform is plenty for most traders. What you really need is efficient order entry, reliable streaming quotes, easily track positions, and solid charting is enough especially for position traders. If you're scalping or doing something crazy with options, you might need more. But for most traders, that's going to be enough. As an FYI, our brokerage, DeCarley Trading, we offer the Zaner 360 as our premier free platform. You can sign up for a demo on our website if you'd like, and there's tutorial videos and that sort of thing, so you can check it out. As I mentioned before, it really, the only thing that I would say that it lacks is some option features like the Greeks and spread trading, but we'll talk about that a little later. Maybe it's not as crucial as some might think, but for a free platform, you really can't get a whole lot better. So if you're an aggressive spread and option trader, you might find it worthwhile to pay up to get what you need. Now, with that said, don't trip over dollars chasing pennies. If you need a particular feature that's not available in the free platform, by all means, open your wallet. But don't be foolish. Don't pay for features you're not going to use consistently. We all know that we've seen, I've seen platforms out there that are $400 or $500 a month, and I can tell you, they're great, they're awesome, they're fun to play with. But as far as using the features on a daily basis and those features helping anybody to make money, I'm not so sure that they're capable of that. They're just fun. It's almost think of it as buying a PlayStation or an Xbox. It's fun, but it's probably not going to make you money. So there are some higher end platforms out there that run from about $130 to $300 a month. And this is my opinion, everybody's different. Unless you're a professional trader, this probably isn't feasible. Now, the ones that are like on the $100, $130 range, I think that's somewhat reasonable for a lot of retail traders. Not all. Anything above that, I think you really might question whether it's worth it to you or not. We're going to, in a few slides as we go along here, we're going to talk about specific platforms, and I'll give you some ideas of what I use and what I recommend our clients use, and you can go from there, but for now we're just trying to get the big picture. So one thing to be aware of when you're choosing a platform is the fee structure. There's really three ways that platforms charge. Now, obviously this is not referring to the free platform. If you're using a free platform, then it's free, and that's great. But if you're using a subscription-based or a pay-to-use platform, they're either going to charge you a flat monthly fee. They start as low as $40 a month. Or they might charge you a per trade fee starting at 25 cents a trade. Now keep in mind, if the platform charges per trade, they're charging you per contract per side. It's not per ticket or per round turn. So you can do the math. If you buy 10 contracts, that's 10 transaction fees, and then you pay another when you sell. So these types of platforms generally have astronomical monthly limits of several hundred to a few $1,000s. I'm not going to mention any names, but I know a lot of platforms that charge these types of transaction fees. I know a lot of them run, they say like a $500 minimum or a $1,000 minimum, meaning that they know darn well that a very aggressive and active trader being charged 25 cents per trade could easily grow their bill into hundreds or even thousands of dollars, and so they cap it. But shoot, unless you're perfectly comfortable paying $500, $600, $700, $800 for a platform, there's no reason to do it just because they're charging you 25 cents at a time. So if you're a high volume trader, you really should avoid these platforms. You're going to end up way overpaying for what you get. But if you're a low volume trader, you should embrace this type of platform because you're only charged for what you're using. You're going to get more bang for your buck. You'll probably get more features and more capabilities with a very small amount of money. Now, keep in mind that platforms that do charge per trade like that, they generally do have a minimum. So it's not like you can trade once a month and pay a quarter for the platform. It doesn't work that way. They usually have a minimum of at least $25. But even then, you're getting a really, really great platform for $25 plus the 25 cents a trade. And if you're only doing, a handful of contracts, then it's no big deal. You're getting a great deal. There are other platforms that charge a monthly fee in addition to a per trade fee. Obviously, the per trade fee is going to be less if they're also charging you a flat monthly fee. Most of those run from 10 cents to 30 cents. So again, if you're a high volume trader, you really want to make sure you do the math before committing to a platform. Okay, this is an opinion. Dual purpose platforms are ideal. And when I say dual purpose, what I'm talking about is A good platform should offer both futures and options on futures trading. I think most of our clientele trades both futures and options. So for our clientele, this is probably, you're probably thinking, well, duh. But there are a lot of futures brokers out there that are offering platforms that only trade in futures. They don't have options. In fact, I just spoke to someone not too long ago that opened an account with a particular broker, and their platform only has futures trading. But this client, when they called to open their account, specifically said, I'd like to trade option spreads. And they opened the account for her, put her on the platform, and she logged in and realized, wait a minute, this platform doesn't even have options. So it's interesting. But in my opinion, you really are doing yourself a disservice when you're trading on a platform that doesn't have options. Some platforms that offer futures only and don't have options, they do come with like a trade desk where you can place orders for options over the desk, but that's no fun, is it? I mean, I think having only futures is extremely, extremely unnecessarily restrictive. Options offer positions and traders, options offer position traders and even day traders a great venue for hedging. Also, now that the exchange has offered weekly options, and particularly Monday, Wednesday, Friday options can be great, even if you're strictly a futures trader. But if you want to buy super short-dated options, almost like binary options. I don't know if you're familiar with binary options, but binary options you buy in the morning and then they expire that afternoon. Now that the exchange, the CME, is offering Monday, Wednesday, Friday options, these are almost binary options. You buy an option today, it expires tomorrow. Or you buy a Monday option on Friday and it expires on Monday. So you're trading a very, very short time frame, and you can buy these options for really cheap. So I really don't understand, even if you don't want to trade option spreads or short options, why you would limit yourself and take that strategy away. I also run into traders that, for whatever reason, choose platforms that only offer futures. So then they have to have two platforms. They have a platform for options and a platform for futures. You're paying two sets of data fees. They have two logins and usernames, and it's confusing and it slows them down. And I don't understand why you would do that. If at all possible, find a platform, one platform that has both futures and options and meets your needs. Okay, so let's talk about option trading platforms specifically. When I say option trading platform, I'm still talking about dual trading platforms. Like, I can't think of one platform out there that only offers options, but so I'm talking about a platform that does futures and options, but you get the idea. So as we already mentioned before, as an option trader, you really want to pick a broker and a clearing arrangement first, then pick your platform, and unfortunately, you might have to compromise a little bit. Again, just to make sure you understand, most brokers don't allow naked option selling. So if that's what you're looking to do, it doesn't matter if you have a nice platform. If you can't do what you need to do, it doesn't do you any good. And a lot of brokers will charge extra margins. They have heavy-handed risk managers. If something goes against you, they buy back your short options and blow out the account without ever talking to you. So again, having an option selling friendly environment is far more important than having fancy probability calculators or payoff diagrams. So once you've found the right broker, then, and only then, seek the best available platform for your needs. So a lot of option traders, they're really, especially, now that technology has gotten so advanced, they're so used to being able to pull up anything on their cell phone or their computer. To be honest, they're looking for a lot of features. They're looking for option calculators, they're looking for the Greeks, they want implied volatility, and they want option spreads. Unfortunately, most free-to-use commodity trading platforms do not offer these features. But I do predict in the near future they're going to be more common. I know the free platform that we use, the Zaner 360, they are working on all of these things as we speak. Unfortunately, it's not something that happens overnight, but it is a work in progress. So I think within the next year or two, I think these types of things will be commonly available on free platforms, but at this particular moment, they're not. I do know some of the broker-dealers, and when I say broker-dealers, I'm talking about stockbrokers that offer commodity options on the side. I'm not going to mention names, but you probably know who I'm talking about. So a lot of the stockbrokers do have option platforms that have all these things built in, and they're free to use. And the reason is, there's a lot more people that trade stocks than trade commodities. So they have more money to throw at research and development and to get things up and running. And so they're a little more advanced than the futures traders. But as we've been talking about this entire time, just because those firms have these nice features in their option trading platform doesn't mean they're nice to trade options through. Again, they will limit your contract months. They're going to tell you which products you can trade. They're going to charge you higher margins. So the platform's great, but the clearing arrangement's not. This is probably an unpopular opinion, but in my opinion, these features, option calculators, Greeks, IV, and spreads, are overrated. But if they're an integral part to your trading and convenience is a must, it's worth paying for an affordable upgrade. There are platforms in the $40 to $50 a month range that can deliver on each of these, and it's probably going to be sufficient for the average trader. So there's no need to go out and spend $200 or $300 a month on a fancy platform. You can, but it's not necessary. You could probably get all of those things for $40 or $50 a month, and I grant you it's not free like some of the broker-dealers might offer, but although you're not paying the broker-dealer for your platform, you're paying in other ways because you're not allowed to trade as many contracts as you would because they're charging you higher margin. Or you can't trade the products you want because they won't allow you. So even though it's free, it's not free. You're paying in other ways. So with that said, $40 or $50 is extremely reasonable to have all of the option features if that's what you want. So let's go through each of these features and see and ask ourselves, are they really worth it? Do they help? Option calculators, do they help? This is my opinion. Other people might tell you something different. I believe that they do not help. In fact, I have an option calculator built into my platform. I've been using this platform since 2008, and I can probably count on one hand how many times I've pulled up the option calculator. So they're fun to play with, and they tend to give traders confidence, but I really don't think that they tell us anything we can't easily derive on ourselves just by eyeballing things. And what's even worse is I think these option calculators, I think they encourage complacency. People, put a hypothetical trade into the option calculator and it tells them that there's a 95% chance that that option will expire worthless, so they load up their account and they think, well, I only have a 5% chance of losing. But that's really not how it works. Options change value, and they change value often and sharply before expiration. So even if an option does expire worthless and that probability calculator was right, you may be forced out of the trade before it ever gets to expiration with a big loss. So I'm really not convinced that option calculators are helpful to traders. I actually think they're harmful because they make people too comfortable. Also, an option calculator is merely a snapshot. Things change quickly. Trust me when I say what the option calculator tells you today may be completely different of what it's going to tell you tomorrow. For example, an option today might say that there's an 80% chance of the option expiring worthless. But tomorrow, if the market moves overnight, tomorrow morning, that option might only have a 30% chance of expiring worthless, and the next day it might even be only 10%. A good example of this, I don't know if any of you follow feeder cattle, but feeder cattle in the last couple of months have been off the charts volatile. And we actually had a trade that was, well, let's just say it was no fun. I'll put it that way. But we started out selling deep out of the money calls. The delta on them was very low, I think 10 or 15%, which means it only had it had like a roughly 85 to 90% chance of expiring worthless. It seemed like a very high probability trade. But the market went limit up 4 days in a row. So the option that we thought had a very small chance of expiring in the money all of a sudden had a very good chance of expiring in the money. So things can change fast. Also, traders, you don't need a calculator. And the other thing about option calculators is, if you've ever used one, they're time consuming. You have to type in all the data and you have to pick which model, do you want Black-Scholes or something else, and what the volatility rate is, and honestly, you're just guessing. They're guesses. What they say, if you're putting junk into the calculator, you're getting junk out. I say, this is my opinion, don't waste time punching all that into the calculator. Just look at the delta. The delta is going to give you roughly the same answer. Maybe it'll be rounded. Maybe it won't be exact to the 0.2%, but it's going to give you a good idea. If you look at delta, it'll give you roughly the odds of the option expiring and the money. So Greeks, do they help? Most traders will tell you yes, they do. Again, in my opinion, I want to make sure that's clear. This is not fact or, this isn't gospel. This is my opinion. I believe the Greeks are nice, but they're not absolutely necessary. And they probably are not going to help you make money. Similar to what we just talked about in the probability calculators, the Greeks are subject to change quickly. Unfortunately, traders look at the Greeks and they take the values that they see today as gospel and they trust them, but they can be very different tomorrow, and those traders might be sorry if they put too much faith into them. And I'm not saying that the figures that they were looking at are wrong or misleading. What I'm saying is it encourages people to be complacent, and when you're selling options or trading options in any way, complacency is not the place to be. Now, if you want access to the Greeks, but you don't want to pay the $40 or $50 a month for a platform that has them, there are some free sources of commodity option Greeks on the web. So it's not as convenient, but if you want to just check them out every once in a while, they're there for you. And if you're a casual trader and you don't need that on the fly, it's probably not necessary to upgrade your platform. So the next one is implied volatility. Does it help? Yes, implied volatility helps. I believe it does. So if there's any one particular feature in an option trading platform that you must have or that you would really like to have, it's implied volatility. Again, there are places to get this on the internet for free, so you don't necessarily have to pay for an upgrade, but of all the features we're discussing, this is the most useful, in my opinion. And the reason being, option trading theory is based on the simple rule of buying options when they're cheap and selling them when they're expensive. Implied volatility basically helps traders analyze when options are overpriced or underpriced. As I mentioned, you can find this for free on the web. Another great source of implied volatility information is through the MRCI. It's Moore's Research Center Incorporated. I'm a subscriber to that service. I think it's roughly $30 a month. For $30, you can't beat it. It's a seasonal service, but it does have implied volatility, which is pretty awesome. And again, this is a feature that you would be able to obtain in a low budget upgrade, such as $40 to $50 a month. And we're going to give you a list of platforms and prices and all that kind of stuff. Just wanted to give you all the background information first before we got into that. So this is something that people misunderstand quite often. Do you need option spread capabilities? I believe that it's a nice feature, but it's not necessary. Well, even if you're trading option spreads, you really don't need to have a platform that's capable of accepting the orders as a spread, and I'll explain what I mean. The one aspect of open outcry trading that was superior to electronic option execution is spread trading. Platforms just really have not been able to replicate the ease of creating user-defined spreads. I remember in the days of open outcry, we did not think twice about calling the floor and placing a spread that had, 4, 6 legs, crazy spreads. We'd just make them up and then we'd go with it, call the floor and place it. It was no big deal. Today, that doesn't happen. It's really difficult to place spreads. Well, I shouldn't say difficult, but it's challenging to place spreads that haven't already been traded by somebody else. So most spread trading platforms, option spread trading platforms, they have exchange recognized spreads visible. So you could search different, for example, if you're trading crude oil, you could do a query and pull up crude oil spreads that have been traded. The only spreads you're going to see listed, and you may or may not see quotes for those spreads, are spreads that somebody else has traded. And I'm talking like the exact market crude oil, the exact strike price, 51, 55 call spread, the exact months. And if it hasn't traded yet, and you want to trade a spread that you don't see, you have to either have a platform that has the ability to accept user-defined spreads, or you have to call a trading desk to get it done. Or you can simply leg in and leg out, and that's what we recommend doing, and we'll talk about that later. So if you do have a platform that does accept user-defined spreads, you can enter in your legs and in the trade that you want to put on, and then you have to ping a market maker to retrieve a quote. That market maker may or may not answer your ping or your request for a quote on that particular spread. So you're sitting there 5-10 minutes waiting. Sometimes it comes right away, but sometimes it never comes, and you just never know. And if you keep pinging, you're probably just going to make the market maker mad, and you really won't hear from him. So there's no win situation there. Also, the spread market has a lot less liquidity and often wider bid-ask spreads than the outright options market. So with that in mind and all of the things that I just mentioned above, we generally will leg in and leg out of spreads. So for example, what I mean by that is, let's say you're trading a full call spread in crude oil. You might buy the 45 call and sell the 50 call. Instead of worrying about entering it as a spread order, and in a lot of platforms, not all, but in a lot of platforms, creating the spread is not necessarily that easy to do. It takes a little time. So instead of taking a couple minutes to build the spread and then ping the market maker and maybe get a quote, maybe not, all you do is you look at the bid-ask spread of the 45 call, you look at the bid-ask spread of the 50 call, and then you simply place your orders on 2 separate tickets. Even if you place the order on 2 separate tickets, the exchange treats it as a spread. So you can spread trade without a platform that has spread trading capabilities. I can speak from personal experience and dealing with helping clients and that sort of thing. Even platforms that do have user-defined spreads, they're not that user-friendly. For example, somebody that's not experienced in placing option spreads and they don't understand the format that the exchange requires will experience a lot of trade rejections. For example, when you're entering a spread order, you have to enter the buy side first. Even if you're selling the spread, you enter the closer to the money strike first. So there's all these little rules that if you're not aware of, you're just going to get rejected order after rejected order, and it's frustrating. So there's a little trick that I've learned over the way. It's super simple when you're legging into a spread. The thing is, when you leg into a spread, an option spread, you don't want to find yourself filled on one leg while the other leg is running against your order. And that way, you know, you're seeing a lot of slippage and the price that you enter the spread in is not what you had in mind. So to avoid that, what you're going to want to do is you're going to enter all the buy legs on the bid, not the ask, and then you're going to enter all the sell legs on the ask, not the bid. This way, your orders aren't going to get filled right away. It's going to give you time to get each leg in, whether it's 1 leg, 2 legs, 3 legs, whatever it is. And then once you have all the legs in, you can go back to your orders and not, you know, tick the price up or down accordingly to get it filled. And that way, generally speaking, you're going to get a pretty fair fill. You're usually basically splitting the bid ask on each of the legs and ensuring that they all get filled. So again, just as a reminder, even if you enter the market this way, even if you're legging into your spread, you're still margined as a spread. So the exchange doesn't care if you did it on 1 single ticket or if you did it on 3 or 4 separate tickets. I enter almost all of my spread orders by legging in, and this is despite the platform that I personally use does have spread capability, but I rarely use it because I find that it's faster and more efficient just to leg in. But that's not always true. Sometimes it is necessary to place a spread order. For example, if you're trying to buy a spread at a large discount to the current price, maybe in your crude oil spread, let's say the current price of your vertical spread is $1.50 and you want to buy it at $1 and just work it good till canceled. Obviously, if you're doing something like that, you need to be able to place a spread order. Another thing is if you're the opposite of that is if you're selling at a large premium to the current price. So if the current price of the spread is $1.50 and you want to sell it at $2, you'd need to put it in as a spread. Another time you want to use a spread order as opposed to individual legs is when you're trading in illiquid markets, maybe the softs like coffee, sugar, cocoa, that sort of thing. If the market's illiquid, spread order is probably the better way to go. Now, our free platform, the most popular free platform that we use, the Zeta 360, it does not have spread capabilities. Unfortunately, I think in the future it will, but at this time, our clients simply leg in and out of spreads unless they decide to upgrade to one of the paid-for platforms. But we do have access to a trade desk that can accept spread orders. So in the case of an illiquid market or trying to buy or sell at a price distant to the current market price, we can enter spread orders. We just have to call the trade desk to do it. So let's actually take a look at a handful of platforms that we offer to our clients, and most brokerage firms offer these platforms, so you're probably familiar with them. You've probably seen them around. This is definitely not an exhaustive list. Other brokers might have different platforms, more or less. I mean, DeCarli Trading is a branch of the Zaner Group. The Zaner Group is what's called an independent IB. What this means to you is we actually have access to multiple clearing firms, and what that means, we have access to almost all platforms that are available. So if you don't see something on our website that you want to use, contact us. Chances are we can set you up on that particular platform. Okay, so these are the free-to-use platforms that we use, that we offer to our clients, I should say. The one on the top is by far the most popular. It's the Zaner 360. It clears through gain futures. The great thing about this platform is it offers a desktop downloaded version with plenty of features. I mean, it does algorithms. You can program your own indicators into it. It really does just about everything any of the expensive platforms do. It also would give you access to a mobile application, the iBroker mobile application, as well as the iBroker web application. So you'd have access to 3 different types of platforms with the same account: a downloaded version, a web version, and a mobile version. The reason most of our clients use this platform, in addition to it being one of the better free platforms available, is that we have a good relationship with the clearing firm, and so we're able to offer option trading friendly margin policies within reason. I mean, obviously, again, I mentioned that being a broker is risky, so as long as you're trading responsibly, we can work it out. But there are, within reason. I'll just leave it at that. The only thing that it does lack, as I mentioned before, is the Greeks, option spreads, and analytics. Those things are on the way, but they're not there yet. And throughout this class, we've kind of mentioned some workarounds on that. We also offer the Onyx and the Oak system. Onyx clears through RCG, Rosenthal Collins Group. The Oak clears through ADMIS. Those are both very big and very well-known clearing firms. The platforms themselves are very basic order entry platforms, no charting, nothing, really very simple. Some people love them, some people don't. It's, everybody's different. Some people like the simplicity of it. They also come with web versions that are also very, very simple. We're talking like drop-down menus, kind of order placement. So it's not quick, but they definitely get the job done. So if you are considering upgrading to a platform to get a few more features, here are some platforms that we offer and recommend. This, again, is not an exhaustive list, but these are platforms that we've found our clients tend to enjoy. Track and Trade Live, we clear it through gain futures. You may or may not have heard this platform, but it is premier. It is one of the better charting applications I've ever used. It's very user-friendly, and it has some really awesome charting features that you have a hard time finding anywhere else. For example, seasonal charts are built in. They have commitment of traders data built into the chart. They have what's called an autopilot feature, where you can actually program automated trading without having any programming knowledge. You use drop-down menus. And the one feature that they have that I've never seen on any other platform is that you can enter option orders directly from a futures chart. So if you're selling a call option in crude oil, you just click your mouse on the $60 area and it populates a ticket to sell a $60 call. So it's pretty awesome. The cost of that platform is $40 a month for the data, but you have to buy the software up front. It starts at $2.99. It goes up from there. You'd have to, I'm not a salesman and I don't get anything out of it. You'd need to talk to them for details. But if you really want a great charting application and you want to trade both futures and options, that is a fabulous choice. Another really good option is City Trader. This is newer, but we love it. At 50 bucks a month, it'll get you access to really anything that you want as an option trader. It has a very simple spread builder, super simple. I'm talking like you drag and drop the legs of your spread in. It offers the option Greeks, and it's very user-friendly. It's web-based. You can access it from any computer. It also has, you can access it from your mobile phone, and it's very, very simple and easy to use, and has all the option features. Another popular platform is the CTS. CTS is great in that it has 3 versions, a desktop, a web-based, and a mobile app. So you have access to the markets in 3 different ways. CTS does have option spreads in its base version, which is basically $25 a month, charged 25 cents a trade. But if you want option analytics and Greeks, it requires a very expensive upgrade, and we're talking a couple $100 a month. So I'm not sure that's appropriate for most of our clientele, but it is available. CTS is a platform that clears through just about almost any FCM out there. They're available almost anywhere, so that's great. But I have found that for whatever reason, it is on the hard side to find an option-friendly clearing arrangement with the CTS platform. I'm not sure why, but that's just been my experience. CQG Trader is, I should say CQG Trader is also a nice platform for 40 bucks a month. I mean, for the price, you really can't beat it. It's fully loaded. It has anything you could possibly imagine. The problem is it almost has too many features. People get frustrated with it. So if you're an experienced trader, you'd probably love it. If you're a beginner, you may not enjoy sifting through all the features. Okay, so if you're interested in paying a little more, there are some high-end platforms that are available. I personally use QST. It starts at $50 a month for the base version, but really if you want it to do everything that it's capable of, you need to spend at least $200 a month, and it goes up to $300 a month. So for most people, it may or may not be appropriate. That said, it is absolutely fabulous. Like I said, I use it every day for charting. It's great. It does have all of the high-end option chains. It actually charts options, which is a nice feature. So if you're trading a $60 crude oil and you want to know what that option has done over the last couple of weeks or months, you can pull up a chart of the option itself and see what the high-low range has been. It has the Greeks, and it does have option spreads, which is somewhat challenged, not because of the platform itself, just because of different clearing arrangements and data feeds, and it gets a little bit complicated. But if you really want the catalog of platforms, that's it in my opinion. Another nice one is Bar Chart Trader at $120 a month. It's a little more affordable with just about any feature you could possibly imagine. You'd have access to it on a Mac computer, which is somewhat rare. Most platforms only run on a PC. By the way, I forgot to mention with the web-based platforms, all web-based platforms will run on a Mac. So if you're a Mac user, a great setup would be the Zaner 360 with the web, the iBroker web, and that way you don't have to worry about parallels or running any other software to run your PC software on your Mac. You could just use the web-based version. Trade Navigator has been around for a long time. The great thing about Trade Navigator, it's about 70 bucks a month. If you do want the option component, it's $130 a month. But what they're famous for is they have massive, massive charting and historical data. I mean, it's crazy how much information you can find in Trade Navigator. They have extremely high-end features and plugins, seasonals, market profile, replay. They have some of the gurus have provide them with indicators and trading signals and that sort of thing, and you can all get that through Trade Navigator. Depending on which broker you're using to trade through with Trade Navigator, you may or may not have access to the iBroker app. So if you are interested in Trade Navigator, make sure you get it set up in a way that you can use the iBroker app so you have it on your cell phone as well. And eSignal is a popular platform at $150 a month. It used to be only a quoting service. They now do offer trading within it. And you know, anyone that's ever trialed eSignals know it's very high end. So I'm sorry to be rushing through these. This class ran a little longer than I had expected. If you I mean, if you want me to send you a list of those platforms and their prices and that sort of thing, just send us an email and we'll get it out to you. We just want to make sure that we're not holding you up. I know you guys have lives beyond trading platforms. So in conclusion, the goal is to make money, not to save it. Don't be afraid to spend money on a platform if you believe it's going to improve your performance. But be sensible. Don't pay for features that aren't going to improve your odds of success. And don't skimp on market access. Option traders must ensure that they have a good margin environment before picking a platform. Also, don't forget, having access to a desktop, a web version, and a mobile application are high priorities. So we want to thank you guys for coming out today. If you have any questions or anything, I'm going to try to go through the questions list here in the chat box. I know there's quite a few of them. Hopefully I can get to most of them. But you can always contact us. I'll show you my email address in a second. If you're interested in learning more about trading and strategy and market analysis, we cover all of those things in higher probability commodity trading. And here's my phone number and email address if there's anything we could do for you. So let me go through the questions here and hopefully we can get you taken care of. Okay, so somebody's asking if the Zaner 360 is mobile as well, and the answer to that is yes. It's not actually the Zaner 360, but you'd have access to the same account via the iBroker app on your cell phone, and it's also web-based as well. So yes, it is. You would get all 3 access points with the Zaner 360. Okay, somebody's asking about Track and Trade. How do I consider that platform? I actually am a huge, huge, huge fan of Track and Trade. It's good stuff. Somebody's asking, what is SPAN? SPAN margin is standard portfolio analysis of risk, and it's basically the margin that's charged on short options or option spreads. It's a complicated equation, and it involves volatility, strike price, demand, all these types of things, and it changes all the time. But it's roughly like if you're selling an moderately out of the money option, it's going to probably be about 1/3 of what the futures margin is, but it changes dramatically. Somebody's asking, what platform do you recommend for someone just starting out? I recommend our brokerage clients use the Zaner 360 if they're starting out, and they can always upgrade from there if they decide they need something more. Someone's asking, which platforms do we offer? We offer upwards of 50 platforms, really, but most of our clients are on probably less than 10, probably about 5. Zaner 360 is very popular. TNT Live is very popular. And we're just now starting to offer City Trader by Option City, and I'm a big fan of that. Somebody's asking about the CME fees, the $3 bundle. Is that daily, monthly, or one time? That's a monthly fee. So you'd be paying $3 a month for all the CME data. So again, it's not a deal breaker, but it's maybe a little annoying. Somebody's asking about platforms like Thinkorswim. I've never personally, well, actually, I have used Thinkorswim on a few random occasions. I think it's a nice platform. The problem with Thinkorswim is the clearing arrangement doesn't allow for trading in very many commodity products. I think they only offer like less than 10 products on that platform, and then they also restrict the trading months, and they restrict the strategies you can use, the type of account you can trade it in. So the platform itself is good. The problem is you can't really do much with it because the underlying brokerage arrangement is not so great. Someone's asking how can you get a copy of this webinar? We're actually recording this, and if everything goes as planned, we will be posting it on the website, and everybody that signed up for the class will get an email when it's available. Howard's asking, can I show the Zaner 360 platform or any platform with both futures and options? Unfortunately, we're out of time for today, but if you go to our website and go to platforms, the Zaner 360 is listed first, and once you click on it, you'll see there's a link to view videos, and you'd actually be able to see kind of video tutorial or a tour of it. Someone's asking how you would leg into a butterfly. It's really the same idea. A butterfly essentially has 3 legs, so you would enter an order to buy the first strike price, another order to sell the other 2, the center strike price, and then an order to buy the capping leg or the protection leg. So you'd place 3 orders, and you'd place the buys at the bid, and the buys at the bid and the sells at the ask, and that way then you're not going to get filled right away, and you can kind of adjust your prices as you go. Someone asks what platform I use. I use QST. It's not the cheapest, but it's a great platform. And one of the reasons I use it for many, many reasons, but the great thing about it for me, which isn't appealing to you guys, is I can trade accounts at different brokerage firms with that single platform. Somebody's asking on Track and Trade, if you click on if you're placing an option order from the chart, do you get to choose the expiration date? And yes, you do. So you'd basically click on the price to determine which strike price you were buying or selling, and then you could fill in the data from there. All right, someone's asking which futures and options trading book I recommend. Well, I'm biased, but I recommend Higher Probability Commodity Trading. It's my newest book. It came out in July of last year. And okay, you have it. All right, good choice. Someone's asking if they can get a copy of the slides for reference. You know, if you send me an email, I will definitely send you a list of those platforms that we had. I know we went through those pretty quick, and you can see the prices and all that kind of stuff. So yes, send me an email, and we'll get that to you. Somebody's asking if any of the platforms have scanners and how capable are they. Track and Trade Live does have a scanner. I think they call it Data Miner or something like that. You could check on their website. It's geckosoftware.com. Honestly, I've never used it, but I know it's there. Okay, I think that'll wrap it up. I appreciate everybody coming. If you think of other questions, send me an email or give me a call. We appreciate your support.